Hello, this is the Tradesight U.S. Stocks, Futures, and Forex Market Preview and domestic and international economic data roadmap for the week beginning Sunday, the 2nd of May and ending Friday the 7th. We just wrapped up April. Statements printed on Friday. It was the dull day. Sadly, with everything that's going on this week, it was the dull week that you kind of could have projected, but it was a little more dull than even we should have expected, right? We had core earnings Tuesday, Wednesday, Thursday, the last 3 days of it. A lot of hurry up and wait there. We had the Fed meeting Tuesday, Wednesday. A lot of hurry up and wait there. We had the statements printing on a Friday for the end of the month. On whatever. It just was not a very interesting setup. So let's start with Forex. Let's look at the dollar index daily chart. As you can see, dollar bounced back a little bit this week. We actually made some good money in Forex for the week, which is unusual because it's been kind of dead. Let's go through the major daily charts there. So the euro dollar, the inverse of the dollar index, dropped on Friday. The pound dollar, this thing's just been bouncing off that red static trend line for a while. The Aussie dollar didn't do anything, has been stuck for a couple weeks. The euro yen also new highs there during the middle of the week, but came back on Friday. Pound yen has not gone anywhere for 2 months. Pound Swiss is what it is, new lows for the last 2 months in the New Zealand dollar pair. Not much there either. So then we look at the intra-week action on the euro dollar, and you can see 30-minute candles. High to low for the week is only 120 pips for the whole week. That's usually a day for the whole week. And obviously, if you look at Monday, Tuesday, and Wednesday, we were basically in a 60 pip range that whole time. Then one little pop and flat. So Friday was the only real day where it moved. That's when the dollar did what it did. Now, meanwhile, the pound dollar, high to low for the week there is only 180 pips. And again, Monday, Tuesday, Wednesday, pretty flat. Little move up on Wednesday, then Thursday flat, and Friday, the bigger move. So we did make some money on Friday, but we made some money over the course of the week. It just was not, it wasn't very exciting, let's be honest about it. Here's the ES front month futures contract. This is the daily chart of the broad market in futures form. So we've made new highs again this week. Why not? There's some things, though, that matter a little bit more than that, so we will go through those things in a moment. Let's go through the major daily charts. Crude oil down at $1.52 to 63.49, so it's hanging near the highs. The highs were back in March, start of March. We're heading into the summer months. We get, energy prices go up as people need air condition, plus hurricane season hits and everything else, and so it's just usually a time of year where prices go up, and if the economy starts to pick up on top of it, there could be something here where oil, but remember, normal oil prices are about $80 a barrel, so getting back to that would not be the end of the world. It would actually suggest the economy is back to a more normal footing. Gold up 50 cents to 1768.80. S&P cash loses $30.30 on Friday, but, well, we'll look at the intra-week action, then you'll know. Nasdaq 100 down 109. Not much there. The SOX down 93. Okay. Biotech's down $1, 1 point on the. So the biotechs didn't really move much. Nasdaq, Russell 2000 down 29 points. The VIX gains $1, which is interesting. Back to 1861. The trend closes at 1.58. Puts the 10-day moving average back up to 0.92. Now let's count backwards. It's a high reading on the trend. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So yeah, we're going to drop off at about an 8.0 number. But again, we did get the 10-day moving average under 0.85. That is a sell signal on the market when it happens. Doesn't mean it has to happen the next day, it was on Thursday at the close. So it doesn't mean it has to happen on Friday when we've got the end of month statement printing. But again, we did get a broad market sell signal, and we were down on Friday. But, whatever. Nothing that's going to rock the boat yet. We'll see what happens. And remember, that 10-day trend never stays down there. If it gets down there, that's a signal. It doesn't sit under 0.85 for an extended period of time. I think the most I've ever seen it down there was like 4 days. Nasdaq volume is almost 4.8 billion shares. Kind of starting to tick back up a bit over the last week, which is interesting. Advance decline ratio on the Nasdaq was negative 1261, so more stocks down than up on Friday. And it was slightly negative on Thursday. On the New York, negative 1106, and then on Thursday it was just positive 78, so almost even. Google on Friday lost 39.26. If this thing gaps down Monday morning and we start to slide in the market, that's a floating island, 3-day floating island, so just be aware of that, and that's not going to be ugly. That's not going to be pretty on a stock like Google. Apple down $2.02. Netflix gains $4.47. Now this one, it's the flip side, right? If it gaps up, you kind of have a floating island the other way, like a positive floating island, if for over the last 7 days or whatever that is. So that could be interesting. We'll see what happens. Amazon down just $3.89 after essentially sweeping to highs, but it gapped over our trigger on Thursday, so we didn't get to trade it the way we wanted to. Hasn't made new highs yet. Tesla up 32.44 on Friday. Facebook down $4.43. Again, another one that if it gapped down enough, it could leave a floating island. You get floating islands. If you gap down and you get some floating islands on Google and Facebook, that's going to be a problem for the market. Zoom, not much here, down $1.53. Goldman Sachs, back down $4.52, but still hanging near the highs. The interesting thing, of course, is the 13 sell signal and the fact that it ran exactly into the risk line on Thursday and couldn't get through and now rolling over. TLT, the 20-year bond ETF, up 32 cents. So bonds trying to come back. Bonds going up, rates going down is what it is. Dow Jones Industrial Average down 184. Bitcoin was up it's at almost 57,000 right now as we speak. All right. Still not back to highs, by the way. Intraday action in the markets. Let's go take a look. We'll go to the 10-minute candles. Now, a couple of people pointed out this is maybe the most boring week we've ever had in the market, ever. I mean, ever, in years. So here it is. You see the back end of last Friday, we stuck in this range. We kind of closed where we closed. You can see the close of that blue candle. So then on Monday, so on Monday we gap up a little bit, and then and dead flat all day, and at the last minute we sell off a bit. It didn't quite fill the gap. Tuesday, kind of a flat opening, and then dip down to fill that tiny gap. But, I mean, keep in mind, this whole time, we're in like a 16-point range max on the ES now from the end of Friday into Monday, into Tuesday, into Wednesday. We got the Fed announcement, spiked both ways, but closed back in that range. Thursday, we finally get some earnings. Wednesday after the close, we gap up Thursday morning, came right back down into that range within 30 minutes. Banged around a bit. Now, we did rally late Thursday, and everybody goes, oh, suddenly it's a breakout. It's not a breakout. Come on, get over it. And so, and then you have the end-of-month statements printing. So we gapped down on Friday, never filled the gap, wiggled around, and at the end of the day, if you look at it, the final 5-minute candle of the week is basically the same high to low as the final 5-minute candle of the prior week, and we spent the entire time in like a 16-point range, except for a few minutes on Thursday. It is unbelievable. I don't know that I've ever seen a week that uneventful ever. And even if you look at the Nasdaq, which at least tried to expand the range, by the way, I'll point out to the downside, not to the upside, right? The Nasdaq closed down for the week. But even then, most of this was nonsense until the slippage on Friday. So this is just, many people commented this might have been the slowest trading week we have seen in, at least 5 years. It's just horrible. Not unpredictable, but sad when it happens because you did have all those things that from what we teach in Module 10. But they're done now, so hopefully we can get back to work. Hopefully this isn't going to be like all of May or anything like that, because it's just pathetic. But we do have the sell signal on the broad market. You can see the Nasdaq side starting to slip last week, even though the broad market was flat. So the signs are there for some action. It's the downside if you get it, and we will see what we can do. All right, in terms of economic data coming out this week, Japan and China start the week on bank holiday. Australia's got their MI inflation gauge. ANZ job advertisements, these are all Eastern time, by the way. On Monday, German retail sales at 2 a.m., commodity prices at 2:30, Spanish and Swiss and Italian and French, German, and the broad European manufacturing PMI numbers. UK is also on a holiday. All right, then we get here to the U.S. Canada's got their manufacturing PMI, so do we here in the U.S. Construction spending, nothing very exciting. Ward's total vehicle sales. Loan officer survey. Japan and China remain on holiday Tuesday. Australia's got their trade balance, then their rate announcement. So it's like the Fed in Australia at midnight plus 30 Eastern time going into Tuesday. French government budget balance, SECO consumer climate out of Switzerland. Money supply and final manufacturing PMI out of the UK. Canada's got their building permits and trade balance. US has got trade balance. That's one of our big three, so we will be half size for Forex Monday night going into Tuesday. Factory orders at 10. IBD tip economic optimism number at some point after that. GDT price index. New Zealand's got their employment change and unemployment rate, 6:45 p.m. Eastern time, along with labor cost index. Japan and China remain on holiday for the first 3 days of the week. Is that the whole? No, it's the first 3 days only. ANZ commodity prices out of New Zealand, building approvals out of Australia, CPI out of Switzerland, Spanish unemployment change, Spanish services PMI, Italian, French, final services PMI, German same, broad European, these numbers come out across the board. PPI out of Europe, 10-year bond auction out of the UK, ADP non-farm employment change here in the U.S., final services PMI here in the U.S., along with our ISM services PMI, our crude oil inventories. New Zealand's got their building consents, and then go to Thursday, German factory orders, ECB economic bulletin, final services PMI number out of the UK, retail sales out of Europe, Spanish 10-year bond auction, French 10-year bond auction. We got a rate announcement out of the Bank of England at 7 a.m. Eastern Time on Thursday. Challenger job cuts here in the U.S. at 7:30. The weekly initial and continuing jobless claims numbers at 8:30. Preliminary non-farm productivity, preliminary unit labor costs. Natty Gas at 10:30. AIG Services Index. Average cash earnings out of Japan. Monetary base out of Japan. RBA, Australia's RBA monetary policy statement. So basically their statement about their Fed equivalent. CACs and services PMI out of China. Inflation expectations out of New Zealand. Trade balance out of China. U.S. denominated trade balance out of China as well. And then Friday, Swiss unemployment rate. We've got industrial production and trade balance out of Germany. We've got industrial production and trade balance and preliminary private payrolls out of France. Foreign currency reserves out of Switzerland. Italian retail sales. UK's construction PMI. Canada's got their employment change, their unemployment rate. Here in the U.S., the non-farm payroll with the unemployment number. So another one, that's the second of our big three this month. So trade balance on Tuesday, unemployment rate on Friday at 8:30 a.m. So it'll be half size in Forex ahead of that. Also could cause a gap in the stock market. IV PMI out of Canada, final wholesale inventories out of the U.S., and consumer credit at 3 p.m. Eastern Time. Woo! There's a lot of stuff. I don't know how much of it's important. We'll see what we get. And the most important thing is this. Let's hope for a little more excitement than what we saw this last week, because that was pathetic. Charts, as usual, brought to you by eSignal. If you've not yet taken the trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.